Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Today, we're looking at the balance sheet of a limited liability company. The objective of the lesson is at the end of the lesson, you should be able to prepare a limited liability company statement of financial position. And remember, we are talking about the balance sheet. And I'll be using a worked example to take you into that. We're looking at a CSEC past paper question, and it is taken from May 2006, number 5. And you're presented with the balance sheet for Price Right Limited as at December 31st, 2005. However, there are several errors, and you are asked to redraft the balance sheet using the vertical style. What you're looking at now is the horizontal format. So you're asked to use the vertical style, and you have to show clearly the appropriate headings. So here are the items that you're presented with. You have assets, and the assets are all in one. You have your liabilities are listed, your authorized share capital is given, your issued share capital is given, you're seeing proposed preference dividend, you're seeing general reserve, you're seeing proposed ordinary dividend. So there are several things that are there, right? So we're going to use this to prepare the vertical balance sheet in the appropriate format. All right, okay. And in doing that, remember your statement of financial position for the limited liability company. There are some things that you must look out for. These are your debenture interest that is owing. If there's any auditor's fee that is owing, those would be current liabilities. You have to look out for your proposed dividend or final dividend, or if this dividend is found in the footnotes of the question, then of course, that is dividend owing. And your dividend owing is a current liability. So you have to look out for those things. And separate and apart from that, remember the balance sheet for the limited liability company, we replace the sole trader section, say similar to the sole trader business, but we replace the finance by, which is a capital section of the sole trader, with what we call equity and reserves for the limited liability company. That is where we have the difference. So remember, in a previous lesson, I did a work example where the extract of a balance sheet was prepared showing the equity and reserves section. So here we go. I had pre-prepared the balance sheet for you so it doesn't take us any long time. So what is done, the name of the business must be entered, or the name of the owner. But if you're given both, remember to use the name of the business. What you're preparing, which is balance sheet as at 31st of December 2005. And again, remember the balance sheet is the same thing as the statement of financial position. So what we start with are the fixed assets. And because we have accumulated depreciation, then our columns are cost, accumulated depreciation, and net book value. Don't forget that your accumulated depreciation is total depreciation to date. To get your net book value, it is your cost minus your accumulated depreciation that would give you your net book value. Your cost column is total, your accumulated column is total. Those are double underlined because we don't need this anymore. What we're going to continue with is the net book value of the fixed assets. After the fixed assets, you're seeing a total of 132,750 for the fixed assets. There was investment, and because this is a long-term investment, it is shown directly after listing your fixed assets, and that value is added to your net book value, which give us 140,750. If the investment was a short-term investment, that would have been listed among your current assets. So our current assets in order: stock, debtors. Remember, you have to subtract your provision for doubtful debts from that. And when we reduce our debtors, by the provision for doubtful debts, the value is $51,775. You list your cash at bank, list your cash in hand, and total those. Our next step now is to look at our current liabilities. And based on the question, we have creditors. So we're going to enter that. And our creditors value is $25,000. It's right here. We also have proposed ordinary dividend. Because it is proposed, it is owing. So that is proposed ordinary dividend. And that is a current liability. And the value of that is $9,000. Let's check. There is also another proposed dividend, but this time it is proposed preference dividend, and the value of that is $700. So we're going to enter proposed preference dividend, and the value is $700. We also have another current liability, and that is the debenture interest owing. Remember, once it is owing, it is a current liability. So we're now going to enter our debenture interest owing, and the value is $600. So based on the list right here, there is no more current liability. So we're going to proceed to put in our total current liability, which is $35,300. And what we're going to do is to subtract that from the current assets. We're going to subtract that from the current assets, so we get our working capital. So when we subtract a 35,300 from a 79,475, we have working capital. And the other term for working capital, don't forget, that is net current assets. And the value of our working capital is 44,175. That figure is added to our fixed asset value, and the value after adding our investments, which is 140,750, and we have a total of 184,925. So remember, your working capital is added. We have long-term liability, and we're going to subtract that now. So less long-term liability. And our long-term liability based on the question is the debenture, right? So that is the 6% debenture, and it is right here. 6% debenture of 20,000. So remember that 6% represent the rate to be paid on the rate of interest to be paid on the debenture each year. But out of that, 600 was owing, and that was listed as a current liability. So we're entering our 6% debentures now, and the value of that is $20,000. And we are subtracting. So the value that we have after subtracting that 20,000 from the 184,925 is $164,925, and that would give us our net assets. So now we're able to move on to the equity and reserve section. So we're doing equity and reserves. Remember, equity is the very same thing as the capital right there. So that would be the share capital section. And here we go. We're going to start with our share capital. or you could call that equity. And because we're presented with our authorized share capital, I'm going to just make a note of that in the balance sheet. And I'm going to show the issued as well. So we have ordinary share capital and we have preference share capital. So let's go with our preference. So we have 20,000 preference authorized shares. So here's authorized share capital. We have 20,000, 7%. Preference shares of $1 each, and the value of that is 20,000, right? So we're going to put in the 7% preference shares, and they're authorized to sell 20,000, and out of that they have sold all of the 20,000 preference shares. So you put what is authorized under authorized and what is sold under the issued. So here we go with the ordinary. They're authorized to sell 125. So we're making a note of our ordinary share. Authorized is 125,000, and what was actually sold is 90,000. It's under issued share capital, and that is 90,000. So we're now going to enter the total. Our total authorized is 145,000, and our total issued is $110,000. And we are finished with the listing of what is authorized and what is issued. So at this time, because we're not going to continue with the authorized, what we need to continue with is our issued. We're going to double underline the authorized. And what we have continuing with, because we want to show what is the total equity and total reserve that are in the business. So therefore, we are going to continue with our $110,000 as our issued share capital. Now that we have that, we can now enter our reserves. And what are the reserves? So from the question, we have general reserve of 31,000. We're going to make a note of that. And the general reserve value is 31,000. Remember, if you're to do a full question and you're presented with general reserve in the footnote and general reserve in your trial balance, you would have to add both figures together to get the total of what is in your general reserve account. The same thing for your fixed asset replacement reserve and any other reserve, foreign exchange reserve. Okay. Other reserves would be share premium. Let's check if there's any share premium in this question. No, there is no share premium. And we have our profit and loss amount of 23,925. That is also a reserve. Another term for the profit and loss there would be retained earnings or unappropriated profit. So we're going to enter our profit and loss. And remember, this is also called retained earnings or unappropriated profits. And the amount for profit and loss is 23,925. We're going to add these two reserves together, 31,000 plus the 23,925, and that gives us a total of 54,925. This total reserve is then added to the 110,000 worth of the share capital, and that gives us 164,925. Now, with that figure equal to our net assets, we can safely say that we have completed the balance sheet accurately. And this figure of 164,925 in the equity and reserve section, you can refer to that as your total equity and reserves. So remember, once your total equity and reserves is equal to your net assets, you can say that your balance sheet is balanced. So here we go with the balance sheet of PriceRite as at December 31st, 2005. Remember, you are to look out for things like your proposed ordinary dividend, proposed preference dividend, and that figure is found in your footnotes if you're given a full question, or if it is labeled final dividend just the same, it means that it is owing and that is a liability. This item would have been a part of your appropriation account if you were asked to the appropriation account. And remember, you could have interim dividend. That dividend would be dividend that is already paid. So therefore, that would not fall under your current liabilities, only your final dividend, otherwise called your proposed dividend. Your debenture interest owing, don't forget, once there is interest owing on that loan, it is shown as a current liability. If there was auditor's fee owing, that as well would be listed under current liabilities. And if it is that you get a question that you're given corporation tax, the corporation tax is subtracted from your profit when you're doing the appropriation account, and it is also shown as a current liability, because the truth is that the corporation tax is not paid until the financial statement is prepared by the business. So therefore, upon calculating that, it is a liability. It is a current liability that the business will have to pay over. So that takes us to the end of this session, where we focus on preparing a balance sheet for a limited liability company.
Like, share, and don't forget to subscribe.